Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
The last couple of weeks, from my perspective, as it is essentially my role to be a risk manager, try and navigate the global markets as best I can and help uncover any potential problems with the news events or anything that would sort of lead us astray in any of our bots. That's essentially my job. But you guys can actually add to our role by helping spread the word of the right communication channels. I know that one of the great things to come out of some of my talk this week, and I'll get into the Forex factor. Let me know if you want me to go through any currencies. I'm going to rip through a bunch today as well. Everything seems to be, with the exception of some GBP CAD based stuff, which is completely retraced, which is cool. We seem to be in a more even toned marketplace, but we have had some volatility. So one of the cool things to come out of this weekend's discussions is that the company is working very hard to find, I don't have an answer and I'm not sure they do yet, but they're working really hard to find a central platform where we can all communicate. Telegram served a good purpose, but I think it needs to be pushed out. I think that when you just look at the participation in terms of subscribers, either to any of the developers' announcement channels in Telegram or any of their chat channels, in relation to the overall subscriber, or even my channel for that matter, in relation to the overall subscribers, there's just not the participation there. So I don't know if it's a lack of the ability to get on Telegram or knowing that it's there or how helpful it is, and so forth. You know, there's all kinds of platforms out there to essentially try and help the communication, but some sort of master platform. To what degree? I know it does exist. I know there are a number of companies that will help sort of onboard you to this platform. I don't know a lot of details past that, when it would show up, how it would be implemented. I mean, there's a lot of big, and I spent a lot of time over this weekend talking with Chris, Josh, and Bill, you know, essentially along with Susan and all of the big leaders. Some developers were present on Saturday. We had, you know, you're sitting around doing video production, you got a lot of downtime. So we got a lot of time to just go through and, you know, set strategy and tactically how we looking to take it forward. And I think the big event, if you guys haven't seen this, you need to definitely take a look at this. This is the Auvoria Prime official channel on Telegram right here. And so this was the momentum event, and then we have obviously the big first live. Acts like the pandemic's just totally slapped us around, but it's really cool to see the videos everybody had done, Derek and company, and all at the resort. This is essentially Ride the Wave. It's going to be in Orlando, so I'm going to be speaking at the event. Meet the developers. Hopefully we can get all the developers in. I understand that, you know, there are certain problems with travel overseas, certain places you just can't travel from because you got to quarantine, which is the pain in the ass. You got to fly to some other city and spend 14 days in a hotel, which is ridiculous. But I'm hoping some of that stuff will be lifted so that a lot of our subscribers, which is a huge chunk globally, can actually make it into the US down into Orlando. But if you guys can, you know, what I would suggest is, you know, again, risk management, right? Understand how your whole travel is going to work. You know, call the consulate, talk to your embassy, whoever you need to be, or just Google it and find out maybe directly from the airport, you know, what the statistics to come in and so forth. Anybody that has a suggestion of a communication platform that's better than Telegram, let me know. Now, again, I'm not making these decisions. I'm just sort of the outside consultant, if you will, because many of you guys know that I'm not really a builder at this organization. I just don't have time for that stuff. Kind of wish I did. The money some of these guys make is bananas. But it's sort of a conflict. But if you guys have any questions or anything related to that, you can certainly rise up to, some of your top leaders that may know just as much, if not more, about this event than I do. But that grand ballroom is huge, guys. And quite frankly, if I were you, just from an outside consultant standpoint, I'd tell everybody, if you can get to the US into Orlando, I would go. All right. So with our sort of communications out of the way, let's take a look at Forex Factory. If you want to put links into the chat window, that helps. You could just DM me directly, Nick, if you got any suggestions. Keep in mind that I know that some of the genius stuff that's been talked about, especially with our AP Live and our whole training room / trading room we're looking to build out, as we already sort of have a beginning model that which is done exceptionally well with Arrow. By the way, I have seen some FX blues in my FX from Arrow guys. Trust me, those that are putting the effort into learning the 10 strategies that Nate and company are throwing out, they are making money. And in many cases, they're doing really well. So I've seen FX books in excess of 30-40% a month, which is killer. And that's, at least in the one case, we know the gentleman, he puts in very, very part-time effort. So it's good to see. But let's go on to, now if you want, let me just actually do this, it'll probably be easier. So the email is svetterl@auvoriaprime.com. Let's spell that right, auvoriaprime.com. Yeah, here's the email address. If you are sending me anything related to accounts, EAs, what have you, I do need you to hook it up to myfxbook.com or FX Blue. There's plenty of links out there that I've posted in my channel. If you need a link to that, just let me know. I understand it is a pain in the ass hooking it up, but trust me, it is probably one of the 5 top steps I will give up in terms of risk management wise and understanding how your EA is operating and or demoized. I made up that word on Saturday, demoizing your account first and then moving to live money. So Forex Factory, talked a little bit about this on Saturday while I was tripping and falling all over the somewhat unstable sprint or camper that we were in, or coaches, as Tyler would refer to it. But we were broadcasting live essentially from the parking lot of the studio. I'm not sure how good it all showed up in terms of recording. I haven't had a chance to look at it, but hopefully it went well. I talked about the Sunday event, which is just a holiday for most of the Down Under folk. Monday was the outlook report. I didn't really see too much craziness in JPY. I may want to take a closer look at that with everybody live today. But all day today, there's some cat and Aussie events. Tomorrow is the big OFOMC statement. So remember, you're looking at this screen here, Pacific time. You can always click on this link up here and synchronize it to, but just do remember that you are viewing this on Pacific time. So always be making sure that the time is relevant to your particular time zone. So just keep that in mind. So that's the calendar. Nothing really going on Friday. Advanced GDP for the US. Many of these numbers are going to come out really good because economies are getting back. So don't let some of these bananas high numbers sort of fool you into think everything's just absolute roses again, because as the problem we're seeing with a lot of central banks that have just dropped way too much debt on countries, including the US, present company included, as far as our country, it's creating a lot of demand for a lot of different stuff. So if you take a look at just basic commodities, okay, which I usually will go to FinViz for just the basic commodities chat, you can click on the futures markets. I just like to look at the futures as a whole, because then you can see everything that's going on with currencies at the bottom. This is actually a really good website. It's what I use for a dashboard. Anytime I'm talking to a client, even the most unsophisticated client, you can show this. But more importantly, you can look at the charts in relation to all this from a daily perspective and just see the correlations in what's lifted, right? Dr. Copper, a foretell usually of a rising demand. I think this is more attuned to just a flat out completely huge demand and undersupply from the semiconductor market. So there's a lot of back orders to semis, which is creating, which is now a formal breakout in copper, something we haven't seen in a long time. Take a look at a weekly chart on this. Yeah, look at that. I mean, that's just a bananas movement from the breakout points in copper. Don't know that I'd be chasing this up here, by the way, just as a side note. But it's just an indication of just how heated things have gotten, especially in semi land. Doesn't have much effect on currencies, but I think that it's important to just note things that are sort of going bananas in just broad currency and or commodity markets. You know, look at the price of lumber. I mean, this is just nuts. Everything's just popped. Cotton, soybeans. This lumber chart is nuts. If you look at this over a weekly, or if I even take a monthly chart of lumber, you know, back when they started trading the contract actively in 09, look at this. Let's go to weekly, sorry. It just puts it more in perspective. So if you're building a house, you're paying double for the cost of the lumber, right? That's not the sign of a heated economy. I don't know what is. Now, we are so outside the stretch. And the problem with a lot of commodities like this is that these aren't necessarily mean reverting markets. So they could stay completely outside of the parameters of normal trade. And we're way outside any kind of standard deviation or Bollinger Bands or Keltner channels. And, you know, this can have an effect on the dollar. So that's why I'm sort of coming from a different angle today and talking a lot about just looking at basic commodities. So let's see, let's get back to Forex land. Here's a dollar right here, daily chart. Again, probably not too much affected, but it's reversal and subsequent rise in many other currencies in not only the pairs, but what I like to call the pin action off those pairs has been sort of rippling through a lot of different stuff. So if you look at Euro USD, still inside the range been talked about for weeks. Don't really have much more to say about that, other than there's probably a chance that we will go up and visit this 2320 area. Remember, you're always looking at these just general zones, not an actual price target. Euro GBP hasn't changed much from Saturday, obviously, just 2 days of a little reversal. This is an area of resistance, even though you can't really see it. We're up against it, somewhat of a little bit of resistance, but we're sort of stepping with what's appearing to be a cup with handles. So it'd be a potential breakout higher, obviously, as maybe things settle down in Euro or in British land and heat up in Euro land, especially in relation to its trading via the dollar. So some of the stuff, the Bank of Japan hasn't really bode well for at least its connection with the euro. No surprise. They have taking a considerably different approach to this pandemic than many countries. GBP USD, actually one other thing here, go to the weekly chart on this one. This is the area that's going to be more of a magnet, right in this 33s, let's just call it 33 even, 133 spot even area. I would expect that since we're starting to lift, that this would become more of a magnet as we've, I don't know, the fall hasn't necessarily picked up, but we've come out of our tight little consolidation that we've been forming, this tight little balance area we've been auctioning with a couple of doji usually indicates there's going to be some sort of extension out of this. So accepting a lot of manual trades for this pair in a short would be difficult for me at this point. GBP USD. You know, again, weakness in dollar. I'm looking for this 4230 area, a retest. It's a pretty important area. Actually, you have this whole zone from probably 4350-ish area all the way down to this 4289. And if we start to see any steam again, I just would be hard pressed because more than likely we've based off, right? dollar continues to weaken. I always say everybody take your Qs and DXY first, and or some fabulous Brexit news as far as the UK is concerned, and this is just going to strengthen. Same thing with CAD. Now, looking at the daily chart on this, one thing I pointed out on Saturday, just for those that missed it, I'll point it out again. So when we came up and just broke, and Neo had a little bit of a rougher time because it was trying to take shorts against this rip, right? But we'd come out of an area on, arguably slightly higher volume, not like a ton higher, but just blew through it. This has just been an absolute area of patience, right? So if you're any kind of martingale-based EA, whether it's something we've developed with our team or any developers around the world, it was taking trades up against this, as I often will not accept something when it's in rip, or what I call a zipper stage that you saw here, but it came up against the shoulder-based resistance from the previous pattern that I'm circling right here. So this was your point, if you will, of, I don't know, short-term, intermediate-term resistance, right? Nice little ceiling it came up against. So for those that held, Neo came all the way back out of its loss or in drawdown, which is slick. So this is just an absolute testament to patience. Part of risk management. It seems like there's 2 zillion things I always bring up as additional important factors of risk management, but a big one is patience. CAD CHF back inside the zone. This one's hard to tell because it would seem to me we probably want to go back up and test the highs again, which is typically the case after you've had an extended move out of a break and you have a rip, or in this case was just a nice real sharp trend up into a new potential balance area, right? Highs, support areas and the lows, we're bouncing between these areas. You're obviously going to have the first attempt at a high made, but a lot of times you'll have a second attempt made at that. And if we break just above that, and obviously everything has to be going well in as far as Bank of Canada land and all of their debt, that hasn't affected this currency as much as others, which has been good from the standpoint of just monetary policy as a country. But you're going to probably want to see this test, provided this area holds. We'll probably be in a more extended bounce, which is better for a martingale-based system. Tough for the systems unless the developers has put in some sort of, all right, let's stop the highs and lows here and recognize that we're trending out of this basing pattern, which is a very good base, by the way. This is an excellent base. So like if this broke down here, I would expect us to test the top of this base. We'd have to see a significant break. Notice somebody came in and defended this area. Probably a couple of big institutions that are long this pair right now. Maybe they were long from the break. Maybe they sold some of the top. They're adding some back down here. Just sort of think like an institution long term. If you want to accumulate a currency for whatever piece of additional, in some cases, very small diversification for the firm's whole portfolio, what are you going to do? You're long on the break, right? You're holding this for a swing long, which can be many months. And if it's, acting well on a pullback, you add to it, right? Somebody stepped in here. This looks like a washout trade. See all this volume? And then somebody stepped in here and started accumulating, it looks like to me. So that would tell me potentially we're going to go back up to the top. So not as much about spending a particular period of time on one currency as just getting you guys to recognize these patterns. So when these trades get thrown to your whatever device, messaging wise, you can recognize that, oh, geez, well, it looks like I actually should accept this trade. Maybe I shouldn't, right? And then there's always that argument, well, Steve's got me accepting this and that and not this, and so then we're we're falling into that dangerous part where we're trying to pretend that we're smarter than the software, right? But I always argue from risk standpoint that if the software just has the ability to be a martingale system, It's not something you want to get caught in when it's breaking out. Because if it's not recognizing the breakout from a long chart or base-based pattern, or a base of large space, I should say, pattern, just like, essentially from September through February, which is a hell of a base. The longer these bases, the more solid the breakout, right? And, with the ability to recognize that, I just purposely just would not step in front of the freight train. Yeah, I would be long. So you can always buy pullbacks here. This was actually a pretty decent opportunity to get in. Any test of this big break, right? So what happened here is you probably see how this volume all stepped in. That's how you know you got a solid break, because you had just a huge break, probably ran tons of stops, and or those buying this break, they sold out right here, and then the selling just dried up again, and they came right back in and started accumulating. This is how trading works in any type of instrument, or product out there. GBP, CHF, kind of the same thing. We're still stuck in an upper range, just like the euro is right now. GBP, JPY, stuck in an upper range. You can see, you can actually even extend these lines out. I think they carry more weight than what they're showing. For the question I just got, these lines are what you call squeeze zones. Actually, are very good lines. It's developed by Dasan. You plugged it into the community and trading view, which oftentimes you find tons of developers to do. And the other cool thing is they run, which I pulled some, it's where I got these fancy triple moving average lines from, yellow, brown, and green. I got these from an award-winning indicator. So they actually hand out awards, which is really cool in TradingView, to developers of custom indicators, where they have a huge following and a lot of them work, right? So these guys are just doing all the work for me that I had to kind of do in the old days when we did all kinds of basic hand charting and paper charting. And, I just don't have time for that stuff anymore. So it's great to have a community of super active developers that are putting out some great stuff. So USD CAD. Now on this one here, let me just reset price so I can show you. Looks to me like this is going to break. So this is a long-term support area. Got to go to the weekly just to find where we're going to be. So I think our first stop is 23. So if we decisively break in the next day, see this doji, if we finish a doji, and the USD obviously has to continue to get down on the DXY first, right? I think we're going to just start to continue. So again, we break. I'm not interested in accepting longs on the break of this, because we're probably going to rip to this support line pretty quick. This is a massive amount of pips down. I just wouldn't want to be in front of this. Statistically, you've got a better shot being short, right? So just recognize this. If it's throwing you lots of US Canadian trades at you on the long side, once this breaks, I wouldn't be accepting them. USD CHF, back to daily. Remember, you always want to focus on daily charts for this stuff. See how the cross changed the direction here? Always note these crosses. The golden cross. I put plenty of definitions to that in my Telegram channel. You can also Google it. AUD USD, still stuck in a big upper range, Whole grand scheme of things, Australian dollar in relation to many currencies has been strong. Unless something changes with the Bank of Australia, I would expect that trend to continue. AUD CAD, same thing, been strong. Obviously, the euro and everything else in relation to the dollar has been weaker. These are all daily charts. Keep in mind, if you're new to charting, I have a couple of intros on my Telegram channel to understand candlestick patterns, how to read the candles. It's really easy, actually. Euro CAD. Always start off with the daily unless you're trading with arrow or some sort of smaller time frame. I always start out with a daily chart with analysis, and then you can drill down in, depending on the time frame that you trade, to 240 minutes, just 4 hours to 60 minutes, all the way down to a 15 or a 5-minute chart. Swiss yen ready to break out, in my opinion. Let's take a look at the weekly. See how we can't even see anything in weekly? Got to go all the way out to monthly. Now, you can see we're looking at many, many years here, just focused on this entire trading pattern up here, which appears to be I don't know, maybe like a double top, sort of a sloppy one at that, because there's been some serious ranges here. This was a big exogenistic event. You guys know, in January, you can Google it. Just Google Forex event, January 2015. You'll see all kinds of stories in relation to what happened. It was basically bananas. But that set, the stage for a big range, and then we essentially came back down to sort of that got way outside the Bollinger Bands, got way stretched in our run higher. Markets have a tendency to try and revert back to the mean, especially in currency markets. We traded back towards. So patience was truly a virtue, and obviously we're looking at a monthly chart. So each candle represents a single month, but patience was certainly a virtue coming back down into these areas. And then we have been balancing for many, many years inside this range, and now we're looking to break. And honestly, I don't even know where the first stop would be. You try and line up as many top wicks of these candles as you can. There's 4 wicks, right? And actually 5 from an upper and lower standpoint. So I would think this whole 24 area is our first stop, which is a big move from where we are. But as you can see, many of these months, candles, as far as just range inside of 30 days, not that much. Look how heavy it was outside of that. Now, there was a lot of events going on globally here throughout this period of time that just really added a volatility. But surprisingly enough, look at the pandemic, and we still didn't have the crazy moves that we had before. So at least in this pair, some of the more recent events, which can certainly be, writing in the history books, and they'll be teaching their kids about this stuff in 100, 200 years. Hopefully everybody's still on the planet then. CAD JPY, let's take a look on the daily. So obviously, weakness of the yen almost across the board in almost every pair. I would expect us to go up and test this 88 area. This is just a daily chart. Sorry, I moved kind of fast on all this stuff. And do keep in mind, as I often tell people, I heard over the weekend, hey, Steve, sometimes you move through this stuff so fast. Yeah, and it's okay. You can always go back and watch these. I've had some students in the past tell me they've watched a lot of the stuff I've talked to, 3, 4, 5 times. It seems like a long time to listen to me drone on, right? But if you can continue to get nuggets out of the presentation in anything you watch, right? In some cases, I'll listen to a presentation if it's some new concept I'm looking to grasp. Many different times. When I was first learning order flow and reading the footprint chart, which is something we use to trade the futures markets and equities, I had to watch some of these videos 3 and 4 times just to understand all the nuances. So in the chat room, someone posts, Swiss central bank let go of the CHF being tied to the euro. That's right. Announced it came overnight. That's right. Even brokers went bankrupt. Yeah, it was like a CHF black swan event. That's right. I totally forgot about that. I wasn't trading Forex that much back then. All right, what else do I want to address? NZD CAD, daily chart. There's gold, by the way, still hovering around, looking to break. I think this is just pausing because the dollar's sort of like not doing much. What else do I want to address? Just real quickly, still inside the tight range here, the 7 to 10-year treasury. Remember, this has a lot to do with currencies. This is our bond market. You want to take a look at the 7 to 10-year. I choose the IEF because it's just a ETF. It's the iShares, whereas the TLT is the iShares 20. So you want to pay attention. See these big moves here, big moves in currencies, but they sort of stalled out and maybe forming a smaller. Keep in mind in any pattern, when you have a decline that goes down, and then you've essentially stopped going down, which isn't necessarily the case here, it can continue to break below these levels. You really want to start to see a basing pattern, right? You want to see it want to build a base, right? And not take out the lows. And maybe when it does get towards the bottom of the support, and this is the case in almost any chart pattern you want to look at, you want to see volume start to dry up, okay? So any test down tells you from reading it that way that a group of what they call other time frame players, it's called OTP. So anytime you hear me say OTP, the other time frame players, and these are typically large banks, hedge funds, mutual funds, family offices, sovereign wealth funds, any pool of money that is wanting to invest long term in this type of security. You're getting signals that they're accumulating, right? And then once we break, which looks to me like this whole 140 area, which has been pretty solid on the upside, this is essentially a breakout, right? Doesn't mean it's going all the way up. It just means that it's breaking from that point. And what it does subsequently trading higher in this case, if that's going to be the play, you want to see when it comes back down to test the breakout that buyers step back in. That's when you know it's a solid pattern. This is my favorite pattern by far. The problem is, from a risk management standpoint, is too many traders from a long-term perspective. And hell, I even see this in mutual funds. Even some of the biggest shops like Fidelity and Vanguard, they're trying to catch a falling knife. They're like, oh yeah, it's gone down so much, and doesn't mean it can't go lower, right? So they see one little rip up, and then they're starting to accumulate, and then boom, they're just happy to get stopped out. And then you have a huge vol day like this, right? When you see these huge vol days come in, that usually tells you short term the range has been capped, which did hold for a little while, right? I should say the range has been capped and bottom floored, if you will, is what we call it, on both upper and lower, essentially support and resistance. And then you can expect a basing pattern. Once we build through that, you want to continue to see it not take too many tests of this low, right? Because you got patterns like double bottoms, triple bottoms, that eventually could give way much lower, which is going to send the dollar in a spin, in my opinion. So there will be different periods of time where the bond markets of any country will have much more lasting and or impactful factors on their currency, and periods of time when it is less correlated between the moves. But I think right now, just the absolute rip down, and you can see that at least with the longer term bond, which is TLT, on a weekly chart, it's held to its long-term 200-day line, right? And that's allowing us, if this breaks, they were going a lot lower. But for now, the decline's been pretty rough. This is also an example of, I always tell newer clients, be concerned, if they have another financial advisor, maybe they haven't given our firm first down all of their money. Maybe they'll start us off with a mil and they got another couple mil to bring over at some point. I'll always tell them, how's that bond allocation done for you? I don't care what bond fund you're in. Damn thing's been clobbered over the last 9 months, right? Not something you want your allocations in my opinion, because all it's done is gone down in price. Oh, but that means the yield's higher. Yeah, no, that's true. The yield is higher, right? You're earning more income, but the whole price of your shares are going down. So it doesn't really matter as much. It just staves off the decline in terms of percentage, by a little bit. We just do not believe in being in bonds, and we haven't for quite some time, over a year. right, so there's my email. You guys see that? If you have any questions, send some suggestions. Do understand the platform from at least my half-assed view on this from what I heard is that we need a platform that is broad enough that will also allow some sort of tie-in, because I know they want to gamify some of these trading rooms, which will bring probably a ton of millennials into the firm, because that's a very powerful thing, using platforms like Twitch or what have you, because I know it certainly sucked my son Evan in to all kinds of gamification stuff and contests he's in using both the Twitch and Roblox platforms. So that's unfortunately the extent of it, because I've been watching. Let's take a look at where Roblox is. I'm watching these dogs because I tell you, I want to get in. This stock just went public, right? So did Coinbase. I think the piece of junk. So for now, I'd probably stay away from this. Just looking at it on a 4-hour chart is usually want to drop down to once something goes public. But I have my eye on the blocks here. I don't really know. It seems like we've still shaken out a lot of the institutional buyers. This is the problem when equities are going public these days, because there's been just an absolute mountain of VC and early stage investors coming in. By the time these things hit the market, look at Airbnb is a great example. They're so overvalued, and there's so many early stage investors that are looking to get out, that I absolutely want to see all this stuff play out before I even start dipping a smallest toe in the water on this stuff. Right? This isn't a recommendation to buy or sell any stock. It's just understand what the current climate is, just because there's so much cash sloshing around all over this whole damn planet, that all kinds of inventive asset classes and crazy crypto and NFTs, all this stuff has been developed to, sort of suck some additional cash. I don't doubt there'll be some great crypto that comes out of all this, and or some NFTs possibly, but the vast majority of these sectors in any huge correction are going to get absolutely annihilated. So just keep that in mind from a risk management standpoint as you guys move forward. Don't get sucked into a lot of this for big chunks of your capital. Keep it really small. So that is all I have to say. Anything, you got my email, send me some stuff. I wish everybody a hell of a good trading week. Stay safe, be kind, everybody out there.